G'day traders, I'm Greg McKenna. Welcome to Markets Morning. It's the 18th of October 2018. Interesting night last night. Stocks were in a bit of a funk. They rallied. The Fed minutes came out. Unsurprisingly, they were hawkish. That saw stocks kind of come under a little bit of pressure. But in many ways, if you look at it from a stock market point of view, there wasn't too much in the Fed minutes that we didn't already know. Indeed, the S&P 500, which closed at 2809, so roughly flat, but just in the red, was 7 points off the high, but 30 points roughly off the low. So big hanging red candle we'll talk about in a minute, but not a terrible night all up. The US dollar did catch a bid. It had already caught a bid before the Fed minutes had came out, but that pushed the US dollar a little bit further. UK inflation was weaker than expected. More Brexit messiness. That kind of hurt. And the dollar was doing well. So we've got euro just around 115, sterling just around 131, pardon me, Japanese yen 112.70 after bouncing off a short-term trend line on the 4-hour charts. The Aussie dollar's at 71.08 after getting up to just below that 61.8% retracement level. So that's a big reversal, half a cent for it. The Kiwis down to the Canadian dollar's weaker. They're at 65.44 and 130.22 respectively. Gold's flat around 12.22. Oil got absolutely belted. $6.5 million inventory build for the EIA. That's about 18 million just in the last 3 weeks. We've seen in builds in US inventories. So that's kind of bearish. And of course, Mohammed Bakindo is saying, or did say last night, that the oil market will continue to be well supplied. The Saudis can't really say that. That would sound like they were pandering to the US, but that's probably where it's coming from. So you've got some big falls. WTI is below 70. Bitcoin's around the same level. It hasn't done too much. Let's kick off. We'll look at the charts. We'll talk about euro, pardon me. And what you'll find today is on a lot of these, a bit like yesterday, I'm going down to the 4 hours. Because in the dailies, there's not a lot going on. But for me, the 4 hours, and you've seen me do it over many moons for Bitcoin, but in general terms, I like to go down to the 4 hours because they give a little bit of clarity. Anyway, so here we are. We had 3 goes at trying to break that 116.20, 30 region. And I said yesterday we were 115.20, 116.20 roughly. Well, that's broken, and we're now down at 114.99. If you have a look at it on the daily basis, you can see that we are at risk of falling all the way back to 114.30, particularly when you have a look at this now. So we're down below about 115.06, 07 is about the 61.8% retracement level of that rally there. And so, I know I've got the 76.4s and the 23.6s drawn, but I don't put a lot of stock in them. Rather, if we fall through the 61.8, then I'm often looking for a full round trip. So I guess my sense is I'm looking for a full round trip. One thing, and have a look at Markets Morning, the written version, one thing is that the psychological basis on which people detest or don't like or don't want to buy the US dollar is neatly explained in a twin deficit kind of thing. I won't go into it too much, but have a look there. So what have we got here? We've got this at risk of slipping. Yes, it's below the bottom of the Bollinger Band, but we'll see here we've got our Jimmy R, our medium-term trend, well, medium-term in terms of 15 and 30 EMA on a 4-hour basis, looks to have turned lower. So 114.30. Now, where do we get if we go through 114.30? We get 112.80, which is just below the 113. Could we really get down there? It strikes me strange, doesn't it? But let's just say we could get a good chance of going to 114, sort of 30, 50, and then we'll see how it looks from there. Dollar yen shot higher. It looked a bit weak yesterday afternoon. My 4-hour chart will come up. We don't need that. Nope. Sorry about that, folks. The 4-hour. Well, let's just fix that. Right, yep, good. Right, so we've got the 4 hours. So we had a little break. There were two trend lines that I had drawn in, and that low there was the bottom of the trend line. So we've broken up. So nice little rounded here. So if you have a look at that, you're probably looking for another 20 to 50 points, maybe a run towards 113.20 or thereabouts, which is only 50 points from here. That's going to very much depend on what the Nikkei does, and the Nikkei bounced off a trend line as well yesterday and overnight, so that's important to keep an eye on as well. If we have a look at sterling, again, for the 4 hours give you a real sense of it, falling, bouncing, falling again. So it's under a little bit of pressure. This Brexit messiness, we've got a deal on the table effectively if Theresa May can get, corral what's going on in UK politics. That seems to have been what Emmanuel Macron said last night when he said, Mrs. May, or he said, Theresa May needs to tell us what she can do based on the politics at home. And that seems to be the issue here. Now, sterling clearly not falling out of bed, but it is worth noting that it's failed twice now over a couple of weeks below the 38.2% retracement level of this 2018 sell-off. That means that 132.80 133 sort of 10-20 region looks like solid support. And what have we got here? We've got it rolling over. So that's a dailies. If it was to break down through that level there, which is 130.80, which is only sort of 20-25 points away, then you would see it come down towards the trend line, which is 129.90. So there could be a 90-point sell-off there. That's going to be really important. It's only really 2 touches. You could call it 3. But, it would be disingenuous for me to say that's a 3-touch trend line when I've actually drawn it through there, and that's semi-coincidental, if I could put it that way. So 129.90, call it 129.80, looks like really important support. We're going to be a lot of news, so there is headline risk here. So my suggestion there would be to position size accordingly. In terms of the Aussie dollar, a big roll over here. Let's have a look here. Again, the 4-hour charts. So we've had this nice little rally to 71.58 last night. That was 10 points or less below the level we were talking about yesterday. It's rolled over a little bit. Here again, the 15 and 30s are looking to cross. Haven't crossed yet, though. We've got employment today. The market's expecting 15,000 with a 5.3% unemployment rate. That's not really very much. The NAB survey, when I say it's not really very much, it's kind of average. The NAB survey would suggest a higher number than that. So if we do get a higher number, then the Aussie will bounce. So where would you find support? You'd find support on the current basis at 70.85 to 70.99. If it's a weak number and that 85 level gets taken out, then we're back at 40 pretty quickly. Have to see how 40 looks, because when you have a look at it on the daily charts, you can see that 40 was reasonable. You can't really make any sense out of it on a daily. And this is one of the things, folks, where I go down to the 4 hours. Like my system, my method works on 1-minute charts. But that's not the way I trade. The reason I do this in Sydney and call it markets morning is the world's gone one round trip. One full daily bar. If you're waking up in Europe, then yeah, sure, you could set it so that Europe was one daily bar, but it's not really, is it? One calendar day, one full daily bar, ends at the end of New York trade, opens at the start of Sydney trade. Obviously, I'm talking Forex, but that's the way it is with all other markets too. And that's why I look at dailies and 4 hours. You can go down to hourlies, and I've done that lots and lots of times, and for years and years and years with traders and the spotties on the desk when I was doing the currency strategy thing. Anyway, that does look like it. So it's 85. I should probably go back just while we got 85 on the bottom side. 58 on the top side. Break 58 gets you to 72, and then of course 72, 30, 50 would be, I would expect, a pretty solid resistance. If we have a look at the CAD, if I can find dollar CAD, everything's still all over the place here. We've got this bounce. So trend lines. If I could only do one thing, it'd be draw trend lines. Trend lines are the king and the queen and the jack and the prince. So that's bounced up quite nicely. I don't really have a feel for CAD at the moment, not in a daily sense. I've got to be honest with you. You can see there's a little downtrend, and as I said yesterday, it strikes me passing strange that dollar CAD is in a downtrend and has been for quite some time when I kind of feel like it should be in an uptrend. But anyway, that's what we've got. Yeah, good luck with that. In terms of the Kiwi, what do we got? Let's go down to the 4 hours so I can make some sense out of this. So trend lines again, broke, came down, broke. What do we got? It's breaking. The MACD would suggest lower. The stochastics are starting to get overdone on the downside. What am I looking for? Well, excuse me leaning in. See, hopefully you're not looking at my nostrils. Let's take that from there and put it there. right? So your garden variety is 65. Oops, just off. This is not going to work. Oh, it did work. Good. Just excuse me one sec, folks. Right. Not perfect, but close. So you're probably going to be looking at 65.30. Now, that's your garden variety kind of retracement. And what have we got over here? We've got about 65.30 was a previous high. So this is going to be really important. This 65 sort of 25.35 region, look for that to be really important support. If it breaks, it runs lower. If it holds, we can have another surge at least back towards that first trend line. So keep an eye on those. Instinctively, I'd say a test. It's only 15 or 20 points. A test down to there and a possible break. Kiwi will take some sucker from whatever the Aussie does. Looking at commodities now, gold on the 4 hours, you can see multiple failures in this 30 region. If you go down to the dailies, you can see that probably somewhere between 12.10 and 12.17 seems to be likely to find some support. Stochastic's a little bit overdone. Not a lot in the MACD yet. You know, we're just getting the opening up of the dailies. And of course, the weeklies do tend to suggest, even though we have got that long tail for this week so far at 12.34, you know, which is in that zone of the 200-day moving average and all the other resistance I've been talking about for a little while. So gold does tend to have a better bias weekly, but just on the 4 hours and the dailies, it does look like it's going to head back towards 12.27 and maybe even a little bit lower. Copper's drifting again, still within the range. But down a little bit at, you know, sort of 277, 276. You know, we've got to keep an eye on this one because this will be important for the Aussie. Oh, by the way, have a look at Twitter from yesterday or have a look at Markets Morning, the written piece today. I've got a really nice chart that interest rates do matter, and that's going to be doubly important for the Aussie dollar. Like, we know they matter for Euro. We know expectations matter for the Fed. We've just seen the impact of hawkishness. But there's a nice little relationship. So I watch the Aussie dollar versus the Aussie US 2-year spread, you know, just on a daily basis, quite closely. And yesterday I thought, oh wow, that's tracking really closely. And I had a look at what the actual hourly correlation over 30 days between that 2-year spread between Australia and the US is versus the Aussie dollar, and that's really quite strong. So the reason I raised that in relation to copper is, let's think about copper as the barometer still. Iron ore is actually rallying, but copper is not. So you've got a, you know, divergence in markets. Commodity markets are commodity markets. They're individual, blah, 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 all that kind of stuff. Copper's financialized in a way that iron ore in many ways is not. But if copper slips, and obviously you've got to get below that 271, if copper slips, that'll tell us something about interest rates, about the Aussie, those kind of things. So just keep an eye on that. That could be a really important cross-market indicator. WTI, right. So that's your weekly. So what you've got is you've got the break of this little trend line. 69.22 looks to me to be really important. If you look at it on a shorter time frame, it looks a little bit overdone. But from my point of view, it does look like potentially we could be going to the 64s or thereabouts. So we'll keep an eye on that. Have a look at Markets Morning. In terms of Brent, you know, we've had another down day. So whereas WTI was down sort of 2 or 3%, Brent was only down 1 point something percent. But you can see here that this 79.20, remember I've talked about 79.22, 79.20 is really important. If you get a breakthrough that, you could easily see a run, and you might even see $70 on a multi-time frame. I'm not going to make that call yet, but you can see that's gone pretty vertical. And you know what I think as regular viewers of vertical markets. They always have to come back at some point. Moving on to stocks, S&P. Right, so let's just drill down on that one. There's your long-legged ugliness. So a positive just on the futures candle. But you know, slightly indecisive. If I was just to look at it unbiased, well, I am unbiased. I'm just, you know, verbaling here. It looks to me like the MACD suggests you could still see further upside. I really do want to see a break and a hold of last night's highs, though. For the S&P, remembering this is futures-based CFD. If that can happen, then we can have a nice little run. Obviously, earnings are really important. US 10s are at 321, so that's going to be really important as well. US twos are at 290. So keep an eye on that. I want to see a break of my 100-day moving average there at 28.29 to really kick on. If it can't do that, then it might be that, you know, we've dropped the rock in the water. The ripples are moving around, and we'll have to see how that goes. In terms of the Nasdaq, it's a similar story. The Nasdaq and the Dow, they all look similar. That's just hanging there. It's a slight warning. Just keep an eye on it. If it goes down through last night's lows on any of the US markets, things start to look wobbly. Aussie market had a cracker yesterday. A nice big rally, but a lot of that was reversed. So we weren't able to hold above the 59.21.22 region, which is 38.2% retracement level. So yesterday's low was high, I beg your pardon, was 33. I'd want to see it up and through 33, but certainly a close above 22 would get me excited for a further run, maybe even back above 6,000. For the moment, the MACD would suggest to me that the gains are going to come. But remember what I've said about the initial signal I often get from a MACD, and the initial signal is sometimes wrong. It's the second signal. It's the powerful one. So we'll keep an eye on that. Any pullback, as long as it holds, and this is true of the Aussie market as any of these pullbacks that hold last week's lows are building a base. Obviously, if the low goes, whole different story. But I'm not getting bearish unless last week's lows break and hold on a closing basis. That was the DAX. Sorry, I didn't talk about that. You know, this is trying to build a base. We're down though. So this 11 sort of, you know, 11.7 to 12,000 region. I know that's a big region. I talked about that yesterday, where this 11.850, and you can see previous low couldn't get through last night. So keep an eye on that. All right, that's it. I better go. You've probably had enough of me now. 16.5 minutes, and where's my Bitcoin chart? There it is. There. Oh, come on. It does look like it's, you know, it's not doing anything on the dailies, but on the 4 hours, it does look like it does want to break higher, but there's nothing in that at the moment, folks. You know, if you're a trader and you're looking at Bitcoin, although the moves are decent, you know, 1%, 2%, that kind of thing, there are plenty of other fish to fry. We don't try and trade markets just because they are there. We trade markets because they offer opportunities. Anyway, that's it from me. On behalf of myself, I want to wish you all the best. Although when it is myself, it's my little team that I'm building as well. And there's so many people who have subscribed, and all you viewers, I really want to thank you. Employment today is really big. We've got a lot of couple of Fed speakers tonight. It's going to be really important as well. Philly Fed's out tonight. I think that'll have an outsized influence as well. So I'll catch you tomorrow. Bye for now.